Alright, I'm not gonna lie, it's kinda late. As you can see, it's 4 a.m. But on the bright side, even though I just got home, I still took a trade today, and I did win the trade on NQ. So we'll quickly go wrap through that to see how I traded that.
I think we should do this as we try. Alright, let's get into the trade recap that I took for today. So the way I like to see this trade, it was pretty standard, to be honest. Pretty like self-explanatory. I mean, not self-explanatory, but pretty simple in terms of we had this low or this hourly low here, which we swept with this candle here. And from there, scaled down to the 5 minute to look for any retracements on the 5 minute, which was this candle up. So essentially, what I view as a retracement of hourly and 4 hourly sweeps are a candle. So for example, if it's a low that we're sweeping, right? If we sweep this candle, which is a bearish candle, we form bullish movement up. The retracement is literally the move down. So this down candle, this bearish down candle, is the retracement that I'm looking for. And from there, what I like to do is scale down to the 1 minute to look for, I guess, the optimum entries where I would like to enter into my trades. Yeah. And also, not to mention that we saw this 5 minute fair value go. This 5 minute SMT. This 5 minute SMT with ES here. Right there. This 5 minute SMT. Alright, I thought I would just come here and just quickly explain what an SMT essentially is. So what is an SMT? So an SMT is essentially a concept made by ICT, which basically compares the correlated deviance. So basically, I guess the difference between correlated trading pairs. So for example, ES, NQ, you could kind of say GJ, UJ. And why I think it's helpful, or why it is actually a very powerful tool to know, is it's a really good way to predict where price wants to go. By saying that, it's like you're kind of telling the future, but it doesn't really work all the time. You just got to use it like specifically with other confluences. But I generally like to use 5 minute or 15 minute SMTs. I very rarely use any 1 minute SMTs because they form everywhere, right? And the way they actually form is, for example, on one pair, let's say we form a lower low and a lower high, and on the other pair it's a lower low and a lower low. An example of this would be like, let's say there are two mountains next to each other, right? And usually, let's say that the movements between these mountains are pretty much correlated. So if a rock is going down, another rock is going down. But sometimes, right, we can have the differences where one rock is going down and the other rock is going up. So me being like a person from the outside view, I'm thinking that if the movements are generally correlated and one rock is going up, then I would probably think that it's smart for me to start making bets that the rock here will eventually come down and follow suit with the other rocks, right? Depending on where market wants to go. And I think that's just the best way to explain it. It's just like a way to predict where price wants to go. Now, back to the trade I took yesterday. And from that, we just essentially scaled down. Shit, that's gold. We scaled down to look for a break, which we got here. Break up here. And initially, I thought, maybe entering off this rejection candle here, which now that I look at it, I mean, that would have probably been the optimum entry, especially if I was looking for that third confluence, which was the Gantt chart here. But I didn't really think that was strong enough, especially since the macro didn't really hit yet. Well, it hit basically on the candle movement. And with price being so choppy here, I want to wait for a bit more confluence, which we actually got. So after rejecting this and I guess viewing this 1 minute fair value gap as a support level, I actually waited for the 15-minute SMT to form on this candle, on the 1445 candle or the 1045 candle for New York session. And from there, I was fairly confident that this would at least take out this high, this session high here, especially with ES pumping up here. So whilst NQ was pretty stagnant and going sideways, like NQ, in my opinion, NQ needed to follow suit with ES. It was definitely the lagging indicator for the day. And yeah, I just basically entered when that. Where did I enter? I entered right 45. Wow, I entered like here on this closure, which was right here. Entered, put my stops below these levels because I didn't really see price wanting to sweep these levels after we had already swept it in. We already swept it during this candle movement. This 1 minute, these 1 minute lows. So I just chucked them under here. I could have chucked it underneath if I wanted to be more. I guess wanted to have a looser stop loss, but again, CPI is coming tomorrow. Price, like for the past 2 days, has been pretty ass. I'm not gonna lie. And today I was lucky enough to find an entry, for this trade. But basically, I toned down my risk. So the 1%. So generally, a 1% for my count would be 1.1 lots, but I only risked half my count today, so 0.6. And also, I only had one TP, which was up here, considering that um, I only entered half the size of my position, right? So I held all the way up to this hourly high here, which I was fairly confident it would have been swept, especially with ES sweeping these levels as well. Now that I look at it, like obviously there were these other hourly highs here and 4 hour highs. And maybe I should have held runners, but I was pretty happy with taking out all my positions here, considering that I did enter lower lots. So yeah, just wanted to secure some profit after 2 shitty days of trading. And in that trade, let's see, I've made about, I don't know if you can see that, I made around $350 on my funded account, which is a bit over 1%. It's like almost 1.5%. So
I think today's biggest lesson didn't actually come from trading itself. It actually came from playing poker with my mates. And that was essentially how to handle the risks you have per, I guess, trade or per hand. Essentially, how I actually handle risk based on, I guess, the environment around me. So, like, whether that be the players in the poker game or the institutions on the live charts or in the market, or like if high impact news is coming out tomorrow, that will generally like impact today's day, and just understanding how to use risk for that. Because I would kind of say that knowing how to manage your risk is the difference between a profitable trader and someone who's a really good trader. Because I can be a really good trader and still be unprofitable if I don't manage my risk accordingly. And I think that was a key takeout from today, where CPI is coming out tomorrow. Price wasn't really the greatest, so I kind of adjust my risk just like how I would in a poker hand. Very happy that I actually played poker before I actually took my trade, because if it wasn't for that, like even though I would have made more money, I think setting habits for long-term success is the difference between viewing trading as, I guess, like a short-term thing and trading as a long-term thing.